Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 4-hour time frame with the bullish scenario where we're looking for an unfinished impulse 1, 2, 3, 4, 5, currently working on wave 4. The common target area for a wave 4 of a higher degree is the wave 4 of a lower degree, and that is what the box here represents, which is a box taken from the start to the end of the lower degree white wave 4, giving you a price target between 66.1k and 63.2k. Of course, we can also use Fibonacci, take a fib from the low of your blue wave 2 to the high of your blue wave 3, toggle on the common target area for your wave 4, and you can see the 0.236 at 65.1k is in nice confluence with the box, and the 382 at 63k is just at the lower edge of the wave 4 of a lower degree, and the red line at 63.2k. Now, what increases the probabilities for price to be in a wave 4 is the 886 touch that we have on the 1-hour time frame. So if we take an 886 here from the high to the low, the first move to the downside, and you can see price touched the 886, and the 886 is a rare target for a wave 2, common for a wave B or a wave X. Therefore, it increases the probabilities that this move towards the downside is a wave C or a wave Y, which in turn increases the probabilities that everything here is corrective, not impulsive, which in turn increases the probabilities to sooner or later move back up to take out the double top and move towards some interesting resistance areas that we still have here. First of all, 69.1k to 69.7k and 70.8k to 71k. Something else I'd like to talk about in this video is using channels. Now, channels have a great relationship with Elliott waves. It's just that I usually personally prefer to use horizontal levels instead of the diagonal channel levels, but I do think in this video it is some good information to share. So first of all, if we look at this structure to the upside, a 1, 2, 3, 4, 5 impulse, then a base channel is a channel that is taken from the low of 1 to the end of 2 to the end of your wave 1. A wave 4 tends to retrace towards the base channel and potentially also hit it or move inside of the base channel. Of course, a wave 4 can sometimes take a while, and you can see the base channel, of course, continues to move towards the upside. In other words, the base channel is an interesting support area for a wave 4 of the same degree, right? We're talking about the blue 1, 2. Now, as an example, I can use the channeling tool here and use it for the white count. So I take the channel from the start of the white 1 to the end of the white 2 over here, and then to the end of your white wave 1, and it doesn't really matter which pivot you take for your white wave 1, because in both cases you can see wave 4 retraced to the base channel, and also if I put the channel here, wave 4 retraced to the base channel, moved outside of the channel to form your wave 5, which is absolute perfection, right? Now, a second channel that is good to know is the trend channel. The trend channel is taken from the end of wave 1 to the end of wave 3 to the end of wave 2. And what you do is once price is moving into a wave 3, you consistently adjust this channel as price moves towards the upside. So if we don't have all of this information, you're going to move this channel like this and then eventually higher and higher and higher. And you can see here, we didn't hit the lower trend line yet. We didn't move out of the channel. We still move higher and higher and higher. And now we put it on top of the high over here. Now, a trend channel is important for wave 3. The moment you move out of the channel and you break the lower trend line, the probabilities increase. You are now looking at a wave 4 and still expect one more high towards the upside for a wave 5. Also, the lower trend line can act as a support for a wave 4. Now finally, when your wave 4 is then finished, when we're looking for wave 5, we are going to pull a end channel, but that is something I'll only talk about once wave 4 is then actually finished, right? Now when we then look at the bearish scenario, we have a finished impulse here, 1, 2, 3, 4, 5, lowers in probabilities because we have the 886 touch that I already spoke about. So preferably if a wave 1 is finished, we start with an impulsive structure to the downside, a 5-wave move to get a deeper retracement, and a zigzag is a common structure in 2 for 535, but because of the 886, probabilities have decreased. However, a scenario that still has potential is therefore a flat. The 886 increases probabilities for a 3-wave structure here, like a zigzag. Now a zigzag can appear in a wave A of a flat, and then have a 3-wave pattern in wave B here for then an impulsive C towards the downside. But in this case, you are still looking for price to take the highs, and with regards to probabilities, looking for a wave 5 has higher probabilities at the moment than looking for a wave B. The most bearish scenario, the zigzag ABC, already has lower probabilities as explained yesterday because of the big extension, but we also hit the 886, and if this is an ABC that is finished, you really want to see a bigger impulsive move to the downside, and the fact that then your wave 2 hit the 886 reduces the probabilities for exactly that. On the 15-minute time frame here, we had a flat, so a 1, 2, 3, 4, 5-wave structure in A is what I was looking for, and then A, B, C towards the upside. Beautiful bounce in the common target area for your B, and then a 5-wave C towards the upside. Now what was important here is the volume. A price over here had the highest amount of volume in the end of this move towards the upside. If this was an impulse to the upside, what we wanted to see was a 1, 2, 1, 2 and then a 3 and still see a 4, 5, 4, 5. So what we then do is we take the 0.618 and we take it from the recent range before the volume came in, and we take it to the high. And we toggle on the 618 because the 618 is an invalidation for a wave 4. And clearly the highest volume is in this move, so we want to label that a wave 3. By far most common that a wave 3 has the highest volume. So therefore 1, 2, 1, 2, 3, we want to see 4, 5, 4, 5, but price moved down, hit the 0.618, invalidating a wave 4, in other words, invalidating a bigger impulse in a 1, 2, 1, 2, 3, 4, 5, 4, 5, increasing the probabilities for a bit more downside. Now at the moment then, for a zigzag, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. Now potentially your 4 is finished, or we create a bit of a flat here, but the 0.618 at least is important. The 0.618 again invalidates a wave of 4. It is pulled from the end of 2 to the low that we have over here. And a wave 4 can be any structure. Can be a zigzag, can be a flat. We now took the low, so the only option would be a flat structure or a running triangle, potentially still a WXY. But at least the 0.618 is interesting. If we do hit this, then the probabilities go down that you're still in an impulse, and the probabilities are higher that you have a finished wave C to the downside. Now we do have some support towards the downside here. Still a bit to go though. 64.8 to 63.6k is some extra support to the downside. We're going to wait and see if price can reach it, but we have been building some local bearish CVD divergences. So price here moved towards the downside. A little bit of 3-minute bear CVDs were there, but then here we had bigger bearish CVD divergences, price moving to the downside, and once again here creating bearish CVD divergences, and these have now just played out while recording this video. You do see we have the bigger bullish CVD divergence, but this one is not interesting. What we like to see to increase the probabilities for this bullish CVD divergence to play out, meaning taking out the high, is local signs of strength. In other words, as long as price is falling here, the bearish CVDs have a higher probability. What we want to see is price changing the market structure, grinding to the upside with higher highs and higher lows, and build consistent bullish CVD divergences. And that is interesting, because then we're going to be looking for price to move up and look for the double top, or at least a bigger retracement to the upside. But at the moment, this CVD here is not interesting. Keeping an eye on more local CVD divergences is preferred. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are highest for an unfinished impulse where we look for a wave 4 and eventually one more move to the upside in a wave 5. On the number 2 spot, we have a finished impulse, and on 3, a finished zigzag. And on the 50-minute time frame, when I started recording, when price was still ranging over here, the probabilities were higher to take out this low. We had the bearish CVD divergences and also looking for a 5-wave structure, 1, 2, 3, 4, 5. Now at the moment, the probabilities arguably are still higher to look for another low, because if this is your wave 2 and an impulse structure 1, 2, 3, and this is your 4, 5, then you can see your 4 is only 2 candles, your 2 is longer. Most commonly a wave 4 is longer than a wave 2, so therefore preferably you have a 1, 2, 3, a longer wave 4 and still one more move to the downside in a wave 5. Of course, we keep an eye on the 0.618 because that is on the number 2 spot here. Hitting that 0.618 invalidates a wave 4 and increases the probabilities for a bit of a move to the upside and to continue this range. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.